Alright, hey guys, it's the Inspector here. Hope everybody's having a fantastic day. And today, I want to teach you about futures trading. Now, there have been a lot of futures trading videos on my channel, but this video in particular will be a step-by-step guide, a beginner's guide to futures trading. So, from depositing your money into Binance, to which indicators to use best, to explaining what leverage even means, how much leverage you should use, isolated versus cross. An example of how to actually put in a trade. So there will be live trading as well. In this video, we're gonna go through everything. And if you find that interesting and want to see this beautiful avatar in your subscription box every day, then subscribe and don't miss out on future videos. Now, if you want to use Binance or any other exchange, check out the description below this video for my affiliate codes. So particularly for Binance, there's a 10% kickback if you use my link. It's a win for me, it's a win for you, and it's definitely a win for Binance, I guess. I'm not sponsored by them in any way, shape, or form. I just use them the most. So without further ado, roll the intro. Alright, gentlemen and ladies, here we are in Binance. When you open Binance, you have the trade tab, which probably is what you're used to, but then you also have the futures tab, which is what you want to get used to, right? So once you open it, there's a little quiz you need to complete, and you actually need to complete that quiz in order to start trading. But once you have completed it, this is what you're greeted with. And so first thing I'm gonna do here is transfer some funds into my futures wallet. See, right now it's empty, it's at 0 USDT, so I'm gonna just transfer from, and how you do that is you scroll down, and on the right side you have buy crypto, convert, and transfer. So obviously you can even buy directly from here, but since I already have some crypto in my spot wallet, I will just click on transfer and I will transfer everything I have. So that's 223 USDT from my spot, so fiat and spot right here, to my USD futures. Now, there's also something called coin futures, and that's pretty much the same thing, but instead of trading with USDT, you would trade with Bitcoin, Ethereum, etc. So since I want to trade with USDT, I will choose USD futures. So let's go and do this. Confirm. And as you can see right now, I have 223 USDT on my balance, and we are about ready to make our first trade. Well, not really. There's a lot to explain before we can get to the first trade. We're going to talk about take profit and stop loss, which is so important. Take profit and stop loss, one of the most important things. It saved me so many times. Stop loss saved me so many times. Take profit took profit even when I wouldn't have taken profit. So definitely very useful tools, and you want to have this checked. You always want to use stop loss. Maybe take profit not all the time, but stop loss you want to use all the time, because it just stops you from getting liquidated. It stops you from losing all your money. Right, so first thing you want to do is pick either isolated or cross. So what is the main difference? Well, if I pick cross and then I enter this trade with, for example, as you can see right here, with $50, and I have $200 in total, and if I used cross and the trade went bad and I would have lost the $50, well, the trade, if it kept dipping, I would have lost my whole wallet because it's cross, right? If I pick isolated, the most I can lose if I make a bad trade is the amount of money I put in. So in isolated, I would lose 51 bucks at most, and for cross, I would lose my whole wallet if I were to get liquidated. Now, if you're new to trading, don't know what liquidation means, well, it's pretty much if the price were to fall down quite a lot, like this, let's say, and I would have put in a long trade. By the time I'm at minus $51, I would get liquidated because my trade couldn't support itself anymore. So I would lose all my trade. I would lose everything I put in. Now, let's start with some of the basics. What does buy long mean? What does sell short mean? Well, buy long is if you think the price is gonna go up, and sell short is if you think the price is gonna go down. Now, shorting the market works wonders when we are in a bear market, but when we're in a bull market, I would never ever short. I would only ever buy long when I think the price will pump. If I think it will go down, I still don't want to short in a bull market because it's very counterproductive. Obviously, that's just my personal preference. I don't like shorting, especially Bitcoin, because you're saying the price is going to go down. And if you believe in this asset, you don't want the price to go down. Obviously, making money is making money. So if you really know it's going to go down and you want to short, by all means, go for it. It's just my personal preference not to short ever. All right, so I just switched from the Binance app to Binance webpage, so Binance.com, because right now, after the last update, for some reason, this trading view here won't work on my Binance app. It only works like this on the original, and I just think the trading view is much better for trading because you can clearly see where you put in the trade. You have this right here for buying long and selling short on the current market price, so you don't actually have to put in here the size of your trade. You can just enter the size right here. For example, go in with 25% of my wallet with 15% leverage, and I can just click buy long and I would immediately enter a trade. Now, of course, there's a lot to talk about before I can actually put in a trade. For example, something we still haven't talked about is the leverage, the amount of leverage you should use, the amount of leverage you can use. So, for example, for Bitcoin, the maximum amount of leverage is 125. Which is something I've tried multiple times and I've been liquidated multiple times, so I would definitely not recommend it, especially if you're new. If you've never done futures trading in your life, I would put it to 1x leverage, and then it's the exact same as spot trading. So basically what leverage is if you put in 2x leverage, it's 2 times the amount of money you would put in on spot trade. If you use 3 times, it's 3 times the amount of money. If you use 125, it's 125 times the amount of money. So therefore, it's 125 times the upside when the coin goes up. So for example, if it goes up 1% on 125 leverage, you would get 125%. But it works in both ways. If it goes down 1%, so if you use the 125 leverage, you wouldn't even get to 1% because that's over 100%. You would probably get to around here, and I know my math is not right, but I'm just kind of trying to show an example here. So if Bitcoin were to fall down from 66,700 to 66,200, you would have lost your entire trade if you were on 125 leverage. So that's one of the reasons I definitely do not recommend using that high of a leverage, especially if you're new. It's pointless to use high leverage. Now let's say you entered a Bitcoin trade on 60,000 and exited on 61,000, and you enter with 500 bucks on 1x leverage. You would still get $10 for such a trade. Now here's the same trade with $600, but this time it's not 1% of winnings, it's 41%, and that's $250 if you were to put in $600, because this time I put in 25 leverage. Now, it's the same trade, the exact same trade, but instead of having $500 here, you actually have $1,500. But it works in both ways. If it were to fall down to 59,000, you would have lost as much. So just the same amount you would have won if it went up for $1,000, you would have lost the same amount if it went down for $1,000. You need to have a risk management. You need to accordingly invest and accordingly put in trades. It really depends on how much money you're working with, how much money you're comfortable with losing, because let's face it, at the beginning, most of us lose a lot of money in futures trading, and then after the period of trial and error, after learning as much as we can learn, we most likely make it back. But if you do have good risk management, you don't have to lose it all, or if you lose, you would not lose a lot, because 1x leverage, if it falls down, yes, you would have lost only $10. So that's really the big difference between using 1x leverage, 25x leverage, and then there's of course 125x leverage. So same exact trade, but with 125x leverage. For a little less than $5, you would have got $10, and that's 208%. If we were to put in more money though, so let's say for 400, you would have got 840, so that's 208%, but that's maximum leverage, and that's something I definitely do not recommend. So this is the calculator right here. You can always click on the calculator and try to calculate your profits or losses. You can go for long, go for short, and you want to choose this P&L, which means profit and loss. So on the upper, so if you didn't understand how it works, on the entry price, you would put in the price you entered at. So let's put in the price that is right now, the mark price, that's 66,741, and then let's say our exit price is at 70,000. And as for quantity, the quantity is, if you can see where my mouse is hovering right now, how much it displays right here with how much money you actually entered the trade. So let's see, if we enter the trade with half the wallet, which is a little over 100 bucks, so 111 bucks in total, the cost right here, my actual cost, and then the buy is 1,647, so that's how much we would get for 15x leverage. So let's just make a little calculation. So let's put in the mark price 66728, which is the mark price right now, and then let's say I was to exit the trade at 7,000 bucks, and then my quantity is $1,647. So yeah, it says it right here as well. My initial margin is $100, and then my PNL is also almost $100. So that's almost 100%. Also, let's put it on 15 leverage. So that would be a win of 73.55%, or $100 for 133 put in the actual trade. So that's how you can calculate your winnings, losses, and how much you would potentially make if your trade were to go through. Right, so now that you've understood all that, let's talk about stop loss and take profit. So when opening a new trade, you can simultaneously set stop loss and take profit. So let's see, the mark price right now is 66,790, 95, 99, shifting all the time. It's at 800 now. So let's just use one of the prices from the order books here, and these order books right here are the trades that people are putting in. So if I were to put in a trade right here like this, it would appear here, and everybody on Binance and everybody not on Binance but just observing would be able to see in the order books that I've put in this trade. So very useful to see kind of where the price is going, very short term, right? So here we go. I'm about to put in my first trade off this video. I will be in the trade for a very short time because this is just for an example purpose, just to show you how this actually works and how you actually put in a trade and what's the best way to put in a trade as well. So for a beginner, I would definitely just click on one of the order books right here, and it displays right here. I'm gonna use 25% of my wallet for this. So let me copy the mark price that I've put in, and as for the stop loss, I will use something similar, but just put it at not 778, but I'll put it at 66,700. And obviously you can just go like this. You can see the mark price go down, for example, 1%. What price is 1%? 66,140. So I'll actually do that for the stop loss, 66,140, and that is a 1% loss. If it goes minus 1% from the mark price, from the price I entered, it will immediately take me out of the trade. I will take a small loss, but I will not have been liquidated. I will not lose my funding. I will not lose the money from my wallet, right? And that is so very important. As for the take profit, we can just put in 7,000 and 70,000 actually, and it doesn't actually matter. I can always exit the trade. This is just to be safe in case they're very bad wicks. Like you can see this wick right here, huge wick. I would have wanted my stop loss to be triggered around here, so I don't have to take this full loss, right? Let's see, if I enter the trade here, full loss would be 2.3%. That's quite a lot, so I would have wanted to exit the trade before, and if I'm not there, or if I'm not able to react on time, it's perfect to have a stop loss that's just gonna take you out of the trade, so you don't lose too much money, you just cut your losses, right? So let's enter the trade. There we go, my order was submitted. It didn't go through yet because the price apparently has risen. Yes. Okay, my order has just been filled. Here are my take profit and stop losses. You can see them right here in the open orders, but if we go to positions, this is my position right now. So so my position is with 800 bucks on 15x leverage, and if we just observe the trade, we can actually see this line right here that is showing where my trade is going, and it's actually going pretty good considering it's a totally random trade. And you can even see my stop loss is right here, and then my take profit is also right here. Everything displayed perfectly, and that's just why I like using this trading view tab a lot more than the original, because I mean, look, if we go to the original, it's not even displayed. So it's kind of tough to see where you entered, how much you're in profit, and you know, stuff like that. So while we're in a small profit, I'm gonna just click on market. So if I was to click on market, it would take me out at the current market price, but I can also choose the price I want to get out on and then click limit, and it would just take me out at a certain level. So that's kind of similar to take profit, not similar, but exactly the same as take profit. So right now, very small loss. It doesn't really matter. I will just take take the market price and get out of this trade so we can continue learning more stuff about futures trading. So next thing I want to talk about, ladies and gentlemen, are the indicators. So indicators I would use to help me kind of see where I would enter, exit trades. I would also click on the candles here, the candlesticks, and choose Heikin Ashi, because it's just much easier to see where the price is going with the Heikin Ashi candles. But obviously this is personal preference. You can use any type of candlesticks you want. Most people just use normal candles like this, so green and red, but I prefer using Heikin Ashi, and I also hate the red candles. I would love for the red candles to be gray, but oh well, you can't have everything in life, can you? Next thing, you want to go to the indicators tab, where it says right here technical indicators, and I will search for RSI, aka the relative strength index. Now this is one of the most reliable indicators out there. The RSI combined with the volume and combined with the candlesticks, the Heikin Ashi candlesticks, you can read quite a lot without ever needing any premium indicators. But in case you do need premium indicators, I'm affiliated with BirdView, the technical indicator showing you strong sell and strong buy signals when there's a lot of when there's big players involved in the market. And most of the time when there's a strong sell, when the indicator says a strong sell, the price will plummet down. And most of the time when there's a buy, a big buy like this, the price will go up. But there will be a lot more told about this indicator in one of the future videos. But in case you do want to check it out, link will be in the description, as well as my affiliate code for a 20% discount. But other than that, you can just use the free indicators right here on Binance to kind of help you read the charts and predict the price action. Obviously, I would need another hour of video footage just to explain how to read the technical indicators, but just to kind of show you in short, this is what I'm mostly looking for. I'm looking for divergences. So if the RSI is pointing upwards like this and the market is pointing downwards, which is not right now, but if it were pointing downwards for the same time frame as the RSI, that would be a bullish divergence, and I would look for a trade to put in. But unfortunately, it is not doing that. It is doing the exact same thing as the RSI, which is still bullish. Both are pointing up. If the RSI were pointing down while the price was going up, there would be a bearish divergence, and the price would plummet down after that. And that's one of the most reliable indicators, one of the most reliable patterns I've used throughout my trading. But now let's try to put in a trade right here, just show you how that works. So I'm still at 15x leverage, which is my favorite leverage to use. I sometimes go for 25, but 15 is really my favorite. I will go with 25% of my wallet and just click buy along, and that's it. No take profit, no stop loss. And as you can see, it put me in a trade a little below the actual price right now, which is weird because when I scroll down, it says I'm in profit. It's pretty weird how that works. So not the most reliable thing in the world, still pretty cool to use. I sometimes don't really understand it, to be honest. Oh yeah, there we go. I just entered the trade at the perfect time by the looks of it. It's nothing else. I just entered the trade. Wow, I really did enter this trade at the perfect time. This is a huge resistance right here. So as you can see, Bitcoin was rejected so many times. It was rejected here, it was rejected here again 4 times, 5 times, 6, 7, 8, and this is the 9th time that it's not been rejected, but it actually went above. I can't believe I had this much luck. I can't believe I had this much luck. But I did enter the trade with only 25% of my wallet. Imagine if I just entered the trade with 100% of my wallet for 125 leverage. That would be hilarious, just to show you how you get wrecked and then I just make a hell of a trade. That would be really hilarious. But this is a good trade after all. 0.10% right now. And if you make a trade like this and you do want to have take profit and stop loss, you can just scroll here, scroll to the right, all the way to the right here, click on this little edit icon, and then you can put in your take profit and stop loss right here. So I'm gonna put my take profit at 69,420, seems like a reasonable price, and I'll put my stop loss at 66,100, also seems very reasonable. I'll just confirm that, and I will let this trade go. I will let it do its thing. I really don't need to do anything else here. If Bitcoin makes a new all-time high, I will have made money. If it doesn't, well, I will just take the loss. It's not a big loss, so that's really all the risk management you need. If you're okay with an $8 loss, then you can do exactly this, what I did. Or you could just exit the trade right now and just not worry about it. Take the win. There we go. And I just took the win. Yes, I know I said I will let the trade go, but you know, just for the sake of the video, I just had to exit a successful trade. Don't want the video about leverage trading to be only with one semi-unsuccessful trade. I want it to be in profit, even if it's only $1. We are going to exit this video in profit. Now, what I think will happen here is it will go back up from the point it fell down. It will rebound down, test this resistance right here, and then continue going back up. So guys, hopefully this made your life just a little bit easier if you ever wanted to do futures trading. Hopefully you understood everything. If you do have any questions, please leave them in the comment section down below. And yeah, this is one of the longest videos I did on this channel, and I just hope you appreciate the effort and detail I try to go into. And that's pretty much it. Thank you for watching, and I will see y'all next time. Peace.